you're sitting on the sidelines right now, waiting for the property market to settle, for rates to drop, or for things to feel safe before you buy, you need to watch this. The GFC, COVID, recessions, the oil crisis, Black Monday, every single one of them came with the same headlines. Property is about to crash. Don't buy now, wait it out. And every single time, the Australian property market didn't just survive it, it came out stronger. Not once, not twice, but every time for more than 50 years straight. I'm not saying that as an opinion. I'm saying that because the data backs it. Crisis after crisis, the numbers tell the same story. And I'm gonna walk you through it so you can see it for yourself. Because here's what a lot of people forget. The ones who bought property during the fear, they're now reaping the rewards. And by the end of this video, you're either gonna have a reason to keep waiting or you're never going to want to wait again. The 1973 oil crisis. Let's go back to 73. Arab nations cut off oil exports to the West. Fuel prices quadrupled almost overnight, much like we're seeing in 2026. Inflation in Australia hit 17.6%, and mortgage rates doubled, climbing from 5.9% to 10.4%, all in the space of a few years. If you were around during that period, the conditions looked catastrophic. Nobody was telling you to go buy a house. Sydney's median house price in 1970 was around $18,000. By 1976, it had doubled to $36,000. Through the worst inflation this country had ever seen, property didn't just hold, it took off. And the people who waited for the dust to settle, they paid nearly twice as much for the same house. Black Monday, 1987. Now let's jump to 87. When Black Monday hit, global stock markets crashed in a single day. The biggest one-day fall-off in market history at that point. The Australian share market dropped 25%, not over a month, one day. That was worse than what happened in the US. And the assumption was that property would follow. That's what everyone expected. Much like today, the headlines were telling people to hold off and wait for the fallout. However, here's what actually happened. Sydney's median was sitting at around 100,000 in 1987. By 1990, it was over 184,000. The gap between the people who bought through the fear and the people who waited only got wider from there. The 1990s recession. Then came the early 90s when Australia tipped into a full recession. Businesses were closing, people were losing jobs, and the country was in an economic freefall. Unemployment hit 11%, interest rates peaked close to 17%. Paul Keating called it the recession we had to have. And for a lot of Australians, it felt like the worst economic period of their lives. This was supposed to be the one that finally broke the property market. If you were reading the papers at the time, you would have believed it. But Melbourne, Adelaide, and Canberra still saw growth through that period. Sydney and Perth stagnated. They didn't collapse, they flatlined, and then surged in the recovery that followed. By the mid-90s, Sydney's median had climbed past 250,000. The people who had held on, or better yet, bought in during that window, came out the other side ahead, but the ones who sold or waited, they watched prices run away from them all over again. Then the big one, the global financial crisis. Banks started collapsing overseas. The US housing market imploded. The shockwave hit every major economy on the planet. The S&P 500 fell around 8%. The ASX 200 dropped roughly 30%. Sound familiar? Because right now, with tariffs rattling global markets, people are feeling the same uncertainty. And here's what a lot of people forget about Australia during this period. We were one of the only developed economies on the planet that didn't enter a recession. The Rudd government pumped $42 billion in stimulus into the economy, and a massive chunk of that flowed straight into housing. Australian property dipped around 4% nationally and recovered all of it within 18 months, while the rest of the world was in freefall. Property in this country didn't drop off, but the fear was still there. People were still being told to wait, and the ones who listened, they got priced out by the recovery. Now, we've all lived through this one, COVID-19. The world shut down, borders closed, businesses closed, and nobody knew when it would end. Much like what we're seeing now with global trade tensions. The uncertainty was everywhere. The media went into overdrive. Property crash incoming. Don't buy now. Wait for the bottom. You know the headlines. And look, the uncertainty was real. Nobody knew what was going to happen, but here's what actually happened. COVID was one of my busiest periods. Not because things were calm, because there was a flood of people at home, reassessing their finances and making moves. A lot of people started selling up and moving wider, working from home, coming in once or twice a week and making that work for their families. They bought through the fear. And then there were the people who sat there waiting for the market to tank. And if anything, It did the opposite. National prices surged between 14% and 52%, depending on the city. Perth, Hobart, and Darwin saw above average increases, even during the lockdown period, when uncertainty was at its highest. The people who moved during COVID came out ahead. The ones who waited got priced out. I watched it happen in real time. So at this point, you must be thinking, okay, the pattern is clear. But why? Why does property keep going up through every crisis when everything else is falling apart? That is the part that most people never explain. It's not magic. It's structural. In the last financial year, Australia's population grew by 436,000 people, but only 173,000 new housing units were added. That's a shortfall of more than 262,000 dwellings in 1 year. And the gap doesn't close during a crisis. It gets worse because construction slows down while demand keeps building. On top of that, net overseas migration hit more than 518,000 arrivals in a single year recently. And that demand is still flowing through the market right now. Capital city vacancy rates are sitting below 1%. And here's the other piece. Every time a crisis hits, the government responds, rate cuts, stimulus, grants, and in Australia, that money disproportionately flows into property. The RBA cut rates 3 times in 2025 alone, and national prices climbed 8.6% that year as a direct result. Then you add the construction cost problem. Since 2020, construction costs are up 43%. US tariffs are now squeezing building materials even further, making it harder and more expensive to bring new supply online than ever before. And that keeps upward pressure on existing stock. At the end of the day, the system is structurally set up to push prices higher over time. Crises don't break that system. They reinforce it. Now, this is another one we're all living through. We've just seen oil prices surge towards $120 a barrel earlier this year, much like they did in 1973. US tariffs are embedding inflation into global supply chains. The RBA is still being cautious, and the media is running the same old fear-driven headlines. It's the same script they ran in 1973, the same one they ran in 1987. In 2008, in 2020, the words change, but the sentiment doesn't. And what does the data say right now? KPMG is forecasting house prices to rise 7.7% this year. Domain says current policy conditions are the equivalent of 5 RBA rate cuts in terms of demand stimulus. REA Group is forecasting 10% growth in Brisbane and Perth, even without further cuts. Open inspection groups are dropping from 12 to 3 in some areas because of less competition. Properties are sitting on the market a little longer than usual, and if you know what to look for, that's not a warning sign. That's a window of opportunity. Every crisis in this video looked terrifying at the time. Every single one, and every single time the people who moved through the fear came out the other side better than the people who waited. Data tells you what's going to happen because it's already happened before. And what happened every time is that property won.